let me show you the most dangerous lie in trading. Now, two identical candlestick patterns, a simple pin bar, same location, same time frame, same textbook setup, a pin bar. Now, one prints and it works in the expected direction, perfect. The other prints and it knocks you right away. So what's the difference here? Now, the question is not do candlestick works, because you can see it right here, this candlestick worked perfectly. So what's the difference here? Well, the question to ask is, when do candlesticks, such as this pin bar, actually matter and when they don't? See, most traders are trading shapes. Professionals are doing something different, completely different. They're trading the reason behind the shape. And today, I'm going to give you one filter that instantly upgrades your price action, and I'm also going to show you how to use AI, like ChatGPT, Claude, Grok, whatever you use, to do all the heavy lifting for you. So this is what no one actually tells you. Candlesticks do not move price. I know, controversial statement, but follow me here closely. Candlestick patterns are, we can say, a record of transaction that has already happened. We can all agree with that. They're basically footprints. I'm pretty sure you also agree with that. And the reason they work is that sometimes that footprint is created by a real motive. Okay, let me try to put it simply. The animal that creates the footprint makes the difference, so to speak. So a footprint can be created by a real catalyst, so new information, expectations repricing, policy expectation changes, risk sentiment, geopolitical developments, a real catalyst, okay? Or it can be just random noise, non-speculative activity, rebalancing, just random stuff. Retail traders, they learn a pattern, they learn a pin bar, they learn a bullish engulfing, they learn an order block, they learn whatever they learn, and then they think every time that pattern appears, take the trade no matter what. Okay, then what happens? They get destroyed because the market is not obligated to respect that pattern at all. So I want you to write this down. A candlestick pattern only matters if a real catalyst caused it. A catalyst that changed something behind the chart. So here's the filter question that you should ask yourself when you see something on the chart that interests you, whatever that technical signal is. When you see it, ask yourself, what new information hit the market that could justify this specific candle? That is the reason why this pattern formed, essentially. If you cannot answer this question, you're essentially trading the effect without understanding the cause. And you can do that if you want, but you find yourself in a loop where you say basically price action works until it doesn't. Okay, I know that feeling. You think you got your technicals figured out until the market just proves you wrong, and you start looking for the next technical system, the next technical strategy, the next better definition of what an order block is, and such. Let me shake you out of that loop. 60% of the time, you're not trading price action. You're trading random noise. Let me try to simplify for a second. There are only a few categories that repeatedly create candlestick matters. Now, that can be scheduled macro data that changes the expectations for a central bank, labor market, inflation data, things that actually matter for the central bank. Now, keep it simple and understand the central bank cares about the labor market and cares about inflation. There are exceptions, but I want you to keep it simple here. There's also central bank's communication that changes the path for the central bank, so that changes what they're going to do next. So they can be hawkish, meaning hike interest rates, or keep interest rates high, or it can be dovish, cut interest rates, keep interest rates low, or it can be geopolitical developments that change the risk sentiment picture, so it moves people towards risk asset, or it moves people to safe havens if there is an escalation. When one of these 3 points are behind the price action button that formed on a chart, then at that point, that particular pattern becomes a signal worth following. Okay, this is the kind of price action that I want you to follow. The price action that has a meaning behind it. Let me get into it, because I know what you're thinking of. Even if you agree with me, you're probably thinking there is a problem. Because, okay, am I supposed to read every single headline, every calendar event, every speech and every rumor to just validate one candle? Well, yes, but also no. See, this is where AI gets useful. To do simply the boring research and do it fast so you can make a cleaner decision. I'm going to show you a simple 3-step framework that you can do with ChatGPT, any other AI tool that has web access, and the entire purpose is to answer one simple question. Was there a fundamental catalyst behind this transaction on this day? Now, this will work much better if you focus on the daily chart, because the AI is better at understanding what happened during a specific day rather than a specific, let's say, hour during the day. You can get confused on that. So if you stick on a daily chart, first of all, the price action on a daily chart is a bit more meaningful. And most of all, the AI is going to understand a little bit better. But you can test this on lower time frame too if you want. Just understand that you should use an AI model that is actually capable of doing this stuff. So ChatGPT is okay, but I think Grok is a little bit better. Gemini is decent, but just use whatever you like and use something that you see gives solid results. In any case, the point is, before you prompt anything, you need to also define the parameters as well. So that's simply, instrument and date. So we're just gonna give the AI instrument details and the date details. So here's the exact prompt that you should use. Now you'll find this pinned in a comment below, so you can just copy and paste it. But basically, you are my market research assistant. Identify the most likely fundamental catalyst behind the price action move in instrument, Euro USD, GBP USD, whatever, on date. Look for scheduled macro data, central bank communication, fresh geopolitical events. Return only information that was relevant enough to have moved and influenced price meaningfully on that day. Ignore irrelevant noise and low impact events. If you cannot find a strong catalyst, say no clear catalyst found. Be picky, focus only on high conviction catalysts. If you find something, cite the source. This is going to be very important, and keep it under 2 paragraphs. I find that better because otherwise it gives you a full paper. You just need 2 paragraphs to understand if there's actually something there or not. Now, as you can see from the prompt, there's a bunch of important rules, but one of the most important rules is to force you to provide the sources. You will want to avoid hallucinations as much as possible here. If the AI cannot cite anything, just assume that it could have made things up. Okay, so let me show you how this works in practice. Say you have a bullish engulfing on the euro against the dollar. Retail traders see engulfing candle, even at support pretty much. So what they do, long without checking anything, they just think this is gonna go higher. Okay, cool, but you don't do that. You first check if there's something real behind the chart that formed this price action right here. So the correct process is, first, obviously, you define the engulfing candle. And this is a true engulfing with the low taken and the close of the candle above the previous high, in this case, of the previous candle. Okay, this is a true engulfing candle. Now, step 2, you ask the AI to find catalysts with sources for that day. And usually it might come with something like a Fed speaker shifted the tone on cuts, a CPI printed change expectations, Trump said such and such, and things went risk off or risk on. Now, all these are valid catalysts. Often the AI will tell one of these things, but in this case, in this specific case, on this day, you run the analysis and it comes up with pretty much nothing, okay? A bit of garbage, a bit of nonsense, okay? But on September 22, no clear major market moving catalyst was found. So what do? There's nothing backing up this bullish engulfing candle on the euro against the dollar. So what do? Do you trust this candlestick? Do you believe this price action? Or do you label it as potential noise and just not a solid high conviction signal? You ignore it. You label it as pretty much that. So you do nothing. This candlestick, despite from a pure technical point of view, being an engulfing candle, yeah, it should be a bullish signal, but in reality, you've just seen, I'm showing you, there's no fundamental backing behind it. There's no fundamental reason, no real fundamental reason for this candle to signify something important happening behind the charts. Okay, so what do? You ignore it. And what happens? There you go, gets stopped out. The retail trader that actually thought bullish engulfing, go long, whatever, got stopped out. You just checking and backing things up a little bit with fundamental analysis. You ignore the trade, you ignore the price action, and you saved yourself a stop loss. Okay, now here's another example. This time is a bullish engulfing, still on Euro USD. It printed on January 22 of this year. So we run the prompt and it comes out with the actual catalyst that happened on that day, which I can confirm is true. And also there is a source attached. You can hit this. You can bring up the source and it's gonna tell you, in this case it's Reuters, it's an article from Reuters showing exactly, the thing that happened that day. The point here, you can use this article, to just get a little bit more context, but the point is, I can confirm this is exactly what happened on that day. Trump walked back a threat on Europe to impose tariffs, to pretty much annex Greenland. So the tariff threat was removed, the euro was relieved, and so this candlestick right here, this bullish engulfing candle on Euro USD, suddenly it's not just a simple candle. It gets a whole different meaning. It's not just a random price formed out of nowhere for no reason. It's the collective sentiment that got shaped during and after an important market development. So is this price action following? Well, yes, it is, obviously. Okay, that's the whole point. So there you go. Candlesticks are execution tools and they're footprints. We can all agree with that. But really not all footprints are the same. So when you add a bit of fundamental context to what you're seeing on the chart, you get a much deeper meaning behind the price action. And essentially you stop trading pretty shapes and you start trading signals and patterns that show real speculative intent. So next time you see a perfect candlestick setup, could be a bullish engulfing, could be a pin bar, could be whatever you look at, ask yourself, first of all, is it a true engulfing, is it a true pin bar? The definition of a bullish engulfing, is it actually that in this case? Obviously it is. If it is, then use AI to find a catalyst behind it. Try to understand what happened on that day, on that moment, to form this exact price action. So try to match what you're seeing on the chart with what happened behind the chart. Okay, and most of all, make sure that what happened behind the chart actually confirms the price action. So if something bullish for the euro happened behind the chart and you're seeing a bullish engulfing on the euro against the dollar, things make sense there, okay? But if no catalyst and no confirmation was found, you ignore it. If there's a catalyst and a fundamental backing, you've got to trade, okay? That's how you turn random price action into quality signals. Now you're using price action the right way.